constitutional requirement. That's what we're required to do by law. And we get tested on it. People don't know. The comptroller comes in and tests us every year to make sure that we're doing that job, that we're appraising properties at market value. And for the last 2 years, they've told us we've been too low. And we get tested on it. People don't know. The comptroller comes in and tests us every year to make sure that we're doing that job. We're appraising properties at market value. And for the last 2 years, they've told us we've been. Okay. So we get tested every year by the comptroller to make sure that we're doing our job. And then the last 2 years, they've told us that we've been too low. So again, we are just doing our job, appraising properties at what they would sell for as of January 1st. If you have a homestead exemption, and you can qualify for the homestead exemption if it's your principal place of residence and you own and occupy the property. If you have a homestead exemption, you can get a really great benefit in terms of a homestead limitation. And that really limits how much your taxable value can grow. The homestead limitation is a state mandated calculation. It's last year's limited value plus 10% or the current market value, whichever is lower. Well, in our Austin market, the market values have always been going up. So usually most property owners will see the assessed value being last year's assessed value plus 10% for limitation. But you'll see that that's going to be a huge benefit for property owners this year, given how much appreciation we've seen in just the 1 year period. That limitation is a tremendous benefit to property owners with a homestead exemption. And then finally, any your limitation value minus any exemption amounts that you qualify for is your taxable value. And the taxable value is what's used to calculate your actual property taxes. Next slide. So here's an example for this year, and this is a very, very typical example. Market value of a property has gone up to $601,000. And again, that is just reflective of what we've seen happening in the market. This is really typical for properties all across the county. Market value at $601,000. But look at the difference in the assessed value. And this is our median assessed value in Travis County. A lot of property owners will see their assessed value in this same range. Last year's assessed value plus 10% means that this year's assessed value is $381,000. So there's a substantial difference between the market value and the assessed value. And that's because of the benefit of that homestead exemption and the limitation. So when you're looking at your notice of appraised value, look for your assessed value, because that's going to be the one that's really important. You're not going to pay taxes on your market value. You will pay taxes on your assessed value minus any exemptions that you may qualify. And the exemptions can be pretty substantial. In Austin ISD, they are required by state law to grant a $25,000 exemption. In the city of Austin, they grant a 20% exemption, and Travis County also grants a 20% exemption. So your assessed value is taken down even more because of those exemptions. So you get dual benefits from that exemption. You get the limitation, plus you get amount off of that to make your taxable value. So this property owner will pay for city of Austin taxes on a value of $304,000 rather than $601,000. So that's really important for property owners to know. This information is all provided on your notice of appraised value. We provide the market value, we'll provide the assessed value, and then there will be a chart for each taxing entity, your exemptions that you have qualified for, and what your taxable value is going to be on that. And again, there is a substantial saving for property owners that have that homestead exemption. Next slide. So if you are not, don't agree with the market value, and again, what you can protest is the market value. If you don't agree with the market value that the appraisal district has assigned to your property, you can protest. The deadline to protest is May 16th. We encourage property owners to file their protest online. It's the fastest way to file your protest online. If you file online, you will get immediate confirmation that your protest has been accepted. You will also get the evidence from the appraisal district through the online portal. And if there is a review of your property and we find that there should be a reduction, we will send you an automatic offer through the online portal. You can also get in line online to talk to an appraiser for an informal meeting. So that is all information that we've got on our website, traviscad.org. We do a whole series of webinars. So we've got videos out there for property owners We talk about things about your property tax bill, understanding your notice of appraised value, exemptions, understanding the homestead limitation. And we just did one on how to protest and things that you need to know about how to protest. That's all on our website, traviscad.org. So we encourage property owners to go to the website, look up at those webinars. But again, if you have a question about the market value that the appraisal district has assigned, the first thing that I would tell you to do is look at some online real estate records, see what the realtors are saying, or contact one of your local realtors and ask them, what are homes in my neighborhood selling for? You may be surprised at what those sales prices actually are, but that is good information that you can get. If the realtors are telling you that homes are selling for less and they give you some samples of properties that have sold for less, you can bring that into the appraisal district as part of your evidence to present to an appraiser or to the appraisal review board. So I would say the very first step is look at your market value and then look at your assessed value. The assessed value is key. And then if you think the market value is wrong and you want to file a protest, check to see for yourself, what are homes selling for in your neighborhood? And you may find that the appraisal district's number is actually right in the ballpark with what the home might sell for. Next slide. But I would say the biggest thing that property owners can do to save on their taxes is to file a homestead exemption. And the homestead exemption, again, it has tremendous benefits. There is a general homestead exemption. So if you own and occupy your property and it's your principal place of residence, you can claim a general homestead exemption. And that general homestead exemption can give you, again, the benefit of the limitation, but it also gives you that benefit of the exemption. And the exemption amount can be pretty substantial. And this slide's a little old. In Travis County, it's a 20% exemption. Last year, the city of Austin increased their homestead exemption to 20%. So they're also offering 20%. And then that's the max that those taxing entities can grant in the homestead exemption. Austin ISD is granting a $25,000 exemption. That's a state mandated amount that they have to grant. All school districts have to grant $25,000 in exemption. But I will say this, there's an election coming up on May 7th. In fact, early voting is happening right now, and you can vote to increase that exemption amount for school districts up from $25,000 up to $40,000. So that's a really important election. Again, if that election passes, the amount of the exemption that you get for the school district will automatically go up to $40,000. If you are over 65, you get the benefit of the homestead exemption, but you also get additional benefit for being over 65 or disabled. And they grant additional exemption amounts that you get to take off. So your taxable value is reduced even further. For over 65, it's an additional $10,000, and then Austin ISD grants an additional $25,000. So there'll be a total of $35,000 additional taken off of your taxable value. For Travis County, again, this slide's a little bit dated. That amount has gone up last year to $100,000. So they'll take off an additional $100,000. City of Austin will take off an additional $113,000 if you are over 65 or disabled. Big benefit if you're over 65 or disabled for Austin ISD and Austin Community College is they also have a tax ceiling, so that in the year that you qualify for that over 65 or disabled person's exemption, your taxes are frozen at that amount. So for the school district or the community college, you will never pay more in taxes to them than you paid in the year that you qualified. And since school district taxes are over 50% of your tax bill, getting that amount frozen is a tremendous benefit to property owners. So if you're over 65 or a disabled person, you get two benefits in addition to the additional exemption amount. For your school district taxes, you get a tax ceiling, and Austin Community College has also voted for a tax ceiling for their over 65 and disabled persons. And then if you're a disabled veteran, if you're a 100% disabled veteran with a service-connected disability, you can get an exemption of all of your property taxes. If you have a disabled veteran and you're less than 100%, then there are state mandated exemption amounts that you can get. And again, that exemption amount is state mandated for all taxing entities to grant that. And it goes anywhere from $5,000 to $12,000. So again, one of the biggest things property owners can do to lower their taxes is to file for their exemption. Can we go to the next slide? So for the exemption, to file your application for a property tax exemption, it's really important for you to do that. It's not too late. You can file up to 2 years late to get an exemption. So if you forgot and you're just now remembering, you can go back and file your application, and we can go back 2 years and we will apply the exemption. You will get the exemption amount. We will start your tax sealing, and you may get a refund if you've already paid that taxes. But one of the important things that we want to remind property owners to do is when you file your property exemption application, remember to include the required documents. We find that most property owners forget to include the required documents, and we cannot by law grant the exemption unless the required documents have been submitted. And the required documents is a Texas driver's license or a Texas state identification card. Only Texas driver's license or Texas ID cards can be submitted, and the address on the driver's license or ID card have to match the address of the property that you're trying to get the exemption on. Again, we can't take military IDs, we can't take passports. It's got to be a Texas driver's license or state identification card, and you've got to include that with your application. Now, you can either mail an application, or again, we encourage property owners, submit your application online, and you can upload all your documents online. Again, it's quickest and easiest if you do it online, and traviscad.org is our website that you can go to get that information. Next slide. So if you, after the process, and again, the appraisal district, we're only part of the process. The other part of that process is a website called travistaxes.com. And this comes into play in August and September when the tax rates are getting set. And remember, tax rates are half of that equation. It's your taxable value times the tax rate equals the taxes that you pay. And we get a lot of property owners that will come in and protest the appraisal of their property, but only 2 people will show up at a hearing rate for the tax rates. And again, that tax rate is critical for you. There is no discretion in the market value. We've got it set market value. We can't lower it just because we want to do anything different. We get tested to make sure that we're doing that. But the tax rates that get set are discretionary for the taxing entity. And again, that website is travistaxes.com. If we go to the next slide, I can show an example of what that website looks like. So here's an example of that website. And this is from 2021. But this gives you an example of what the 2020 tax rate was, what the no new revenue rate is, and what a no new revenue rate is. What does the tax rate need to be to get the taxing entities the same amount of money that they got in the previous year? So making all things equal, if values go up, the tax rate should go down to give them the same amount of money. And that's called a no new revenue rate. And then it shows you what their proposed rate is and the difference in terms of how much additional money you're going to pay because they adopt a rate that's higher than that no new revenue rate. So this website will be really a good tool for property owners to use. Again, this gets updated in August and September when the taxing entities start setting their tax rates, but it gives you information about what are the rates that they're proposing, when are those hearings going to be, so that you can participate in that side of the equation as well. Again, the appraised value is half of the equation, but a really important other half of that equation are the tax rates that get set. And we do not see the participation by property owners in that equally important side of the equation. And we want to encourage them to participate in that as well, because it can have a tremendous impact on your overall tax bill. Next slide. So when we talk about the taxes and what everybody's paying, I'd like to use a you, me, we analogy. When we're talking about a wedding reception and somebody else is paying the bill, then I'm like, everybody gets champagne, somebody else is floating that bill. If I'm paying the bill, if I'm the one paying the bill, everybody's drinking water. And I might pull that hose from the backyard just to give you the water. But maybe we need to collectively say a glass of iced tea is good, because what we pay in taxes is all about the services that we're demanding as taxpayers. And when we go to those tax rates and those budget hearings, we need to be prepared to tell them not only what services do we want to see, but what things are they spending money on that we don't want to see them do that anymore, so that they can save us some tax dollars, because that's really important. We just don't want to rail about, I don't want to pay tax. Tell them what we don't want. What services can we do without, and which ones do we think are really our priorities? because that really becomes, the key in what they're trying to do as elected officials and setting their tax rates. So, I don't want to say that, they should never increase their taxes because we want services. But I think that there can be a happy median where we can all agree that these are the services that we want and that we're willing to pay for. And so that's my you, me, we analogy that I use. And I think my time is up, and I will cede the table and the floor to Bruce.
Well, thank you so much for that. That was very insightful, very insightful. And we do have a couple of questions, and Avis is going to ask those. So I'm going to try it again. Maria. Okay, I'm going to get that before the end. Okay, Maria. All right, Avis.
The first question we have is who qualifies for ISD, city, and county exemptions?
Okay, so the exemptions are for the school districts, it's state mandated. All school districts must grant the $25,000 exemption. For the city and the county and all the other municipalities, it's the local governing bodies of those jurisdictions that get to determine whether or not they will grant the exemption and how much the exemption will be. In terms of qualifying for the exemptions, that's done by the legislature and it's state law. So for a general homestead exemption, to qualify for that exemption, you must own and occupy the property, and it has to be your principal place of residence. You can qualify for the exemption if that's the case. Now, you can only claim one homestead exemption. So you can't claim homestead exemptions on multiple properties. It must be your principal place of residence. For an over 65 exemption, you must be over age 65 to qualify for that. For the exemption for a disabled persons, you must be a disabled person. Usually the way to qualify for that is to send in proof that you're receiving Social Security disability. So the standards are the requirements for Social Security disability are the requirements to qualify for the disabled persons exemption.
Thank you very much. Next question. What are some options if you don't qualify for homestead exemption?
If you don't qualify for an exemption, then I would say that we probably need to talk to the legislature about if there should be additional exemptions applied, or if there should be additional ways of providing some property tax relief, because that really is going to be the job of the legislature. What I do with the appraisal district, we are bound by the Texas Property Tax Code, so we don't have discretion to do anything more than what the tax code allows us to do. And the tax code is what defines what exemptions can be adopted by taxing entities and who qualifies for those exemptions. So I would say you would need to talk to the legislature. I know there's a lot of questions out there because, if you're in a rental property, rental properties don't get a homestead exemption. So they don't get the benefit of that limitation. And so there may be some discussions that you need to have with your locally elected officials at the state level about what kind of additional property tax relief they can provide.
Okay.
Maria, thank you so much. Thank you, Avis, for those questions as well. We're going to go on just to make sure we're staying on time. We're going to go on with Bruce Elfont. Okay, and his slides are ready.
Great. Well, good morning, everybody. Thanks for joining us. Hopefully next year we'll be able to do this in person again. We certainly enjoyed the town halls that were in person, but we really appreciate this opportunity to be able to visit with everybody by Zoom, because these are certainly important issues for all of us. So let's click slides. Next slide, please. Yeah, this is a slide about the things that the tax office does. Obviously, we collect property taxes. We issue vehicle registrations and title transfers and voter registration. I'm going to end with voter registration. And then we collect court fines and fees. Our office is going to be moving in the next month or so. Our main office will be moving to Ridge Point Drive, which is at the intersection of 290 and 183. So watch out for information about that. It's a beautiful office. We're looking forward to it. We do, we do encourage people when they're able to skip the trip and pay their property taxes online and do their vehicle registration online. It's easier for y'all, and it cuts down property taxes for us. So the costs that we have to pay to provide the services. Next slide, please. Okay, the effective tax rate. I should have changed the slide. It used to be called the effective tax rate. As Maria said, it is called now the no new taxes tax rate. And Maria touched on this, but it's really important because all of us got our appraisal bills. And I told Maria she needed to be sending out smelling salts with the appraisal bills so we could kind of come back to consciousness after we've seen them. The confusion is that most people think when they get their appraisal, like, oh my God, my taxes are going to go through the roof. And your taxes may go up, but it's not because of the appraisal, and certainly not by itself. The no new taxes rate, the effective tax, it's great that my voice is messed up as soon as I get to start talking. The no new tax rate sets the bar at the amount of money that the jurisdictions brought in last year. And so that's the first step. And if that's what they did, then unless your appraisal was higher than average, you wouldn't see a tax increase. But we know in a rapidly growing community, you're not happy about the potholes in front of your house. You're not happy about the traffic. Plenty of things that we're not happy about. And you're demanding that the city and the county and the school district and others do something about it. So that's when they start. That's when they start spending money. They hold the hearings that Maria talked about. It is so important that more community members participate in these hearings. There may be things that you want to see that they're not doing. There may be some efficiencies that can be achieved that hadn't come up before. Believe me, these are very stressful processes for all the elected officials. They don't want to raise taxes more than they absolutely have to. And so they really want your input. Are there things that we can do about? So they set the effective for the no new tax rate. They hold the hearings. They set their tax rates, and the tax rates for the county and the city, I know, can only go up 3.5%. And the school district is something similar, but it's a more complicated formula. And so there are caps for how much the entities can raise their taxes. And so there's that protection on top of the homestead protection, where your tax obligation is not going to go up more than 10% in a year. So after they set the tax rate, and they send that to us, and we calculate what the bills are. Generally in October, early November, we send out the property tax bills. They're not due until they're not delinquent, I should say, until the end of January, the February 1st. They're actually delinquent. But a lot of people may want to pay their property taxes before the end of December, so they can take advantage of the federal deductions on their income taxes, although it's not as good as it used to be, but for some people it still works out okay. So January 31st is the last day to pay without penalty or interest. And this is really important because if you put it in the mail the afternoon of January 31st, you may not get a timely postmark. And you may not have looked at the mailbox that said the last pickup is at 4:30 and you mailed it at 5:30. I have to go by the postmark, period. Unless we made a mistake on our end, I have to go by the postmark. And usually February and March, a lot of my time is spent talking to taxpayers who are so upset that they didn't get a timely postmark, or they forgot to put a stamp on the envelope, or they forgot to put the check in the envelope. Nothing I can do about that. The best thing you can do is pay electronically, and we'll talk about that in a few minutes. But if you're literally a minute late into February 1st, we have to charge you the 7% penalty and interest, and it goes up 2% each month, and it rises to 24%. So it's really stout. The legislature wants the tax offices to have a hammer to be able to collect taxes. I think this is kind of a sledgehammer, but it's state law, and that's what we have to do. So we encourage people to pay as much as they can. If they can't pay everything, and a lot of people can't pay everything, we want them to pay as much as they can, as fast as they can, so they can protect themselves against that penalty and interest as much as possible. Let's see, I think we're going to the next slide. Okay, this is the way you can pay. Again, late payments are penalty and interest. So we're encouraging people to, one, receive their bill by e-bill. You can sign up for e-bill on our website, traviscountytax.gov. And it means that we don't have to print out a bill and mail it to you. And we spend about $250,000 of your tax dollars mailing tax bills. So we can save some tax dollars by having people sign up for e-bill. And the good thing about e-bill is you will get your bill before anybody else does. I don't know if that's good or bad, but you will get your bill first before the bills are mailed out. And so you will have even more time to figure out how you're going to make your payments and all. So we encourage e-bill. We encourage people to sign up for to pay by e-check. An e-check is basically an electronic check where you go on our website, you put in your account number, and it's just $1, and you don't have to worry about whether you remember to put a stamp on your envelope or whether you got a postmark timely. So we encourage people to pay by e-check. I think next slide, please. Okay, this is the skip the trip, the e-check. When I took office, we collect, $5-6 billion for 140 taxing entities in Travis County. And when I took office, we collected about $50 million online. This year, we've collected $1.6 billion online. So we are moving towards e-check, and we are saving tax dollars because every paper check is a check that the employee doesn't have to physically process. And what I will tell you also is that it's more secure. And we've had some issues in the last year or so where mail has been getting stolen out of mailboxes. And so we would encourage people to pay by e-check or literally walk it into the tax office. But I'm a little bit unsettled about what we're seeing with the Postal Service right now. So e-check is really the answer for that. Next slide, please. I think this is, yes, payment options. So seniors, if you're 65 and older, if you have disabilities, or veterans, you can pay in 4 equal installments. You can sign up for that with our office. So you don't have to pay the whole thing at one time. You can do it 4 times through the year. And as long as you're current with that, you can do that. There's no penalty and interest for the payments that aren't made before everything's paid. If you're 65, you can also defer your property taxes. And this sounds really good, but it's a little bit complicated. You have to think about where things are going to be 20, 30 years after you're 65 and you pass away, because the property tax bill has to be paid within 180 days of somebody passing. And if the money's there and the property taxes can be paid and the property can stay in the family or however they want to do it, that's great. But if that property tax bill is going to be untenable, and I deal with, and Marilyn will probably talk about this too, I deal with people all the time where the property tax bill is huge and they don't have that kind of money to be able to pay off the bill at that point, and they may well lose the property that's been in their family for generations. And that's just so heartbreaking. So if you're going to think about deferring payments, you have to think about, is this going to work for you? If you have kids, you want to make sure it's taken care of. If you don't have kids, you don't care what happens to your house, it may be a great thing for you. You don't have to pay any more property taxes when you're 65. But know that when you do pass, that the tax office, the county is going to foreclose on the property and resell it. The other thing I should mention about deferred payments is if you have a mortgage, your mortgage provider may not allow you to defer the taxes, so you would need to check with them and to see. So on the deferrals, the interest is 5% versus that 7% that goes up to 24%. So in times where the interest rate's higher, it might be a pretty good economic decision to defer the taxes. You might be able to put your money somewhere else and make a little bit more with it. But that's stuff that you kind of have to work through on your own. So let's talk about delinquent payment plans. So you hit January 31st, you can't pay it all. I strongly recommend the first thing you do is contact our office and say, look, I can pay half of it, I can pay 2/3 of it, whatever it is, and talk to us about getting on any payment plan. And we will work something out that will be realistic for your circumstances. The worst thing you can do is put your head in the sand and say, I don't want to deal with it, I'll deal with it later, because the clock is ticking on that penalty and interest. And too many people get so far down the road that penalty and interest, they can't even pay that off, let alone the principal. And that's just not going to end well. So what I will tell y'all is that for the people who contact us and agree to set up a realistic payment plan, one, as long as you're meeting the requirements of the payment plan, we will not foreclose. We cannot foreclose by state law as long as you're doing what was agreed to. And the other point I want to make is as long as you're talking to us and doing the best you can, it's very, very rare that we're going to foreclose on a property. But the last thing we want to do is put somebody out of their home. It's in our interest and your interest to keep you in your home. And the people who get in the most trouble are the people who won't talk to us. And I'm working on the list of the top 10 delinquent property taxpayers for Travis County that we're going to be releasing in the next couple of weeks, and breathe a sigh of relief. They're all commercial properties, no residential properties here. And just about everybody on this list that we're going to release are people who refuse to return my phone calls, refuse to return my emails. And if you're not going to talk to us, I don't have as much sympathy as I would for somebody who's really, they lost their job, they've been hurt by COVID, and they're struggling. We want to do everything we can to help you. Mario wants to make sure all the exemptions are there. We really want, you to be in the best possible financial position possible. Let's see if there's anything that I missed here. Payment, the way you can pay is you can pay, obviously our preferred method is e-check. You can mail it to us, but if you're going to do that, one, make sure that you're far enough that you're going to get a good postmark. You're going to get a timely postmark. And then we would prefer that you just drop it off in one of our drop boxes here at the tax office, so there can't be any concern about the checks being stolen. You can pay by credit card, but the credit card fee that the vendor charges is 3%. And that's, unless you're looking for airline miles really desperately, I wouldn't recommend the credit card. I think the e-check is certainly a better option. And of course, you can walk it into our office during business hours and get your receipt. If you pay by e-check, you'll get a receipt online immediately. And so you will have that. I paid at 11:57 p.m. Here's my receipt, and you'll be protected that way. Let's see. Oh, the one other thing I wanted to mention is that under the CARES Act that the Congress passed earlier this year, there is money available to help people who have been impacted by COVID. So if you lost your job, if your business was hurt, your family members, you had COVID, you had to take time off. There's a program, it's called www.texashomeownerassistance.com. And it's not on the slide because this is like brand new. Texashomeownerassistance.com. You can go to them and you can apply for some relief. And just literally in the last 2 weeks, they've paid out over $300,000 for property tax payments for Travis County residents. So there is an income requirement, but when I looked, I can't remember what it was, but it was pretty generous. And so a lot of people obviously are qualifying for it. So if you were impacted by COVID, we certainly want you to take advantage of this money that's available to help y'all pay your taxes. So
Bruce,
yes, ma'am.
Bruce, I think we have to go to some other questions, for you. The folks are chomping at the bit.
Let's just do the voter registration one, 30 seconds, and I'll stop. As Mario said, we have an election on May 7th, and there are 2 propositions that have to do with property taxes. If you want to get information, you can go to the Legal Women Voters Guide, and basically they're pretty beneficial to property taxpayers, not so much to renters. But the sad thing is that on propositions this important, probably 90 to 95% are going to sit at home and allow a majority of 5% to make this decision. And that's not how democracy is supposed to work. So I encourage you to, if you haven't voted already, to go to the League of Women Voters Guide, read up on the propositions, make your decision, and make your voice heard. Don't let somebody else do this for you. So I will stop there, and I will answer any questions that people might have. So thank you.
Okay, Avis, can you chime in with some of the questions? And just to let everyone know, if you can post your questions in the Q&A, that would probably be best. So that way we don't go back and forth between the chats and the Q&A. Okay, Avis?
Yes, I'm gonna take some questions from the chat since we have more over in the chat right now than we do in the Q&A. Let's see. And I don't know, maybe this might be for Mara. What was the percentage that homestead exemptions can limit the assessed value?
So the homestead limitation is a state mandated calculation. And it is last year's limitation value plus 10%. So 10% is the annual increase in that limitation value.
Okay. And we have some attendees that live in Wilco, not Travis County. General question, are the exemptions similar in other counties as in Travis County?
So the Williamson County taxing jurisdictions will set their own exemption amounts. It's state mandated for school districts. So all school districts will grant the same amount of a homestead exemption, $25,000, $40,000 if it passes in the election. But each taxing entity in Williamson County, if you're in Round Rock ISD or the city of Round Rock, they will set their own exemption amounts, but you can get that information from them.
Okay. And can married spouses claim separate property exemptions?
No, married couples are treated as a single entity. You can only claim one exemption on one property. Either spouse can claim the exemption. So if you're over 65 and your spouse is younger than you, you can still claim the over 65 exemption based on the oldest spouse. And the surviving benefits, if you pass away, your spouse can have inherit your exemption, your tax ceiling for your over 65 if you are age 55 or older. But married couples are treated as one.
Okay.
Okay, thank you so much. Let's go to Marilyn. You're on mute, Marilyn.
I don't mind waiting for the questions because the presentations were very thorough. And
we're going to have some more time for that at the end. That's why
Okay.
we're trying, once we get there. Yes, ma'am.
but to allow that, one thing that I run into oftentimes with clients is confusion about the differences between the CAD, the appraisal district, and the tax office. And so they will come in with an issue that involves one, and I'm arguing you have to go to the other office. It's important to know that when you're talking about your exemptions, when you're talking about valuation, when you're talking about actually reaching the point of a tax assessment, you're dealing with the CAD office. Actual taxes, that's Mr. Elphitt's office, the tax office. But if you'll go down to, in my scroll, can you scroll down? Okay, right there. A lot of us live in Travis County. We're dealing with properties that are considered urban if they're within the city limits. But a lot of these same issues come up with rural properties. With rural properties, you also get the possibility of an ag assessment, an agricultural adjustment to your valuation. But keep that in mind that a lot of everything that we've discussed involves either urban properties or rural properties. Let's go down. Part of my work is helping families keep their properties. When there's a lawsuit for back taxes, that lawsuit will end usually in a foreclosure, and that property being taken and being placed up for auction. It's a great opportunity for investors, but it's a really sad opportunity for a homeowner who has been caught in the position of having back taxes. Let's go down to the next screen. Title is something that often will place you in a position of having delinquent taxes. By title, you can acquire, title is basically ownership of the property. You can acquire ownership by purchasing the property. You can acquire ownership by deed. Someone actually will record a deed to someone of the property. You can acquire property by gift. There are moments where you will acquire property by operation of law. I gave for an example an adverse possession, or you can acquire property by death. There's been a death in the family and the person dying either has a will, which would be a testate disposition, or that person doesn't have a will, which would be intestate. Let's go to the next slide. Most of my cases have concerns with what Texas calls heirs property. We grew up calling it heir property. If you grew up in Texas and you've had family that's been here for decades, for generations, most of us have something that we're very proud of, and it's called heir property. But heir property can create real problems for you, especially with taxes. Most common is there will be a death in the family. You will have an aunt who's paying the taxes for years. It gives everyone else a chance to go out and have families and have babies, and the aunt is taking care of everything. You've got this heir property, and then the aunt dies, and then the taxes stop being paid on the property. This creates a real issue. A lot of times you've got big families by then. The families don't even know each other. There's an argument, if I start paying the taxes, are you going to give me my money back? But heirs property is basically a tenancy in common that has no agreement governing the division. There hasn't been what we call a partition. Generally, it's acquired from a relative. And then heirs property is when 20% or more, 20% of the ownership interest is held by relatives or someone who bought a piece of the ownership from one of your relatives. Now let's go to the next slide. And that can happen with rural or with urban property. Heirs property is probably not a good thing. It creates an instability of property ownership because the more that the property gets transferred from one generation to the next by intestate succession, the greater the likelihood that you're just going to wind up with a piece of property with a lot of owners who only own a small percentage of the property. And then any owner may transfer his interest. And that creates problems. You will find investors who will try to come in and try to convince an owner to sell his little piece of ownership in the property. I hope that just beware. Beware, heirs property also subjects to partition. And there are two types of partition. There's if you've got acreage, someone with a small percentage can come in and say, well, let's divide it up. That's a partition. If you've got an urban piece of property with a homeowner, an owner, a co-owner is still entitled to a partition, but you can't come in and divide the property up. And so you wind up with a partition by sale, and it forces the sale of the property. I added loss of wealth. For many of us, that piece of property may be the most significant piece of wealth that a family owns. And a forced sale means a loss of wealth for that family. This again is whether you're talking about an urban property or a rural property. Most of the issues I see that involve urban property involve families that have been in Austin for generations. Many of you who are new to Austin may not run into some of these issues for urban property. Let's go to the next slide. Okay, so something completely real, property taxes. I will ask you, Maria and Bruce, to please tell me if I'm making incorrect statements here. But payment of the property taxes by one person does not automatically make the person who paid the taxes the owner of the property. They may want you to think that, especially when you've got a situation where there was significant delinquency in the taxes. But just because a person comes in and pays the taxes, he doesn't own the property. The appraisal district and the tax assessor records are not the conclusive proof of ownership. I have an issue with that now, where there's been a death. The deed may even say that it's an undivided interest, but there was a probate of only that interest in the property. And then when the deed comes up at the appraisal district, they'll put on it 100% ownership. And then I get a client who's calling, they're all upset because of what appears in the appraisal district records. The appraisal district records are not conclusive proof of ownership. So what is? It's a title search of the actual real estate records of the county clerk. I just thought I'd mention that. Exemptions and deferments are only available usually when the taxes are current. Is that a correct statement? Maria, you mentioned that someone could come.
Anybody can claim an exemption at any time. And for us, it's really about whether or not you qualify for the exemption.
Okay.
We are not looking to see if your taxes are current. So if you file for a late exemption and you are delinquent on your taxes, the appraisal district will still apply the exemption. Okay. The question about whether or not the deferment can happen if you're delinquent, I would have to defer to Bruce because we don't do collections in my office.
And I'm not 100% positive, but I don't think a deferment can happen if there's delinquent taxes.
Can't hear you, Bruce.
Oh, can you hear me now?
A little bit better.
Can you hear me?
Okay.
Okay. I'm not 100% positive, but I don't think that you can defer your taxes if you have an outstanding delinquency.
Okay. Okay. So not so for exemptions, but deferrals. It's going to become important. That's significant for a tax, for someone who's the other thing is about to be brought into court for tax delinquency. The other thing that I practice that I've seen within your office, Bruce, is that once a lawsuit is filed for collection of delinquent taxes, after that happens, is it too late to get a delinquency payment plan?
Oh, absolutely not. You can get a delinquency payment plan literally right up until that Tuesday when we're selling on the courthouse steps. There's no deadline until the foreclosure has been completed, and we certainly encourage people to come forward when they're able to.
Okay, good. I'm glad to hear that. All right. And then another thing that comes to my office is the taxes are delinquent on a piece of property, and the common owners, the co-owners, start hollering, well, she's supposed to pay the taxes because she's living on the property. The truth is, all of the owners are actually liable for property tax. And the property is going to be subject to a tax foreclosure suit if there's a delinquency. And even if the person who's in it, if that person's not paying, then it's time for a family meeting. Okay. Is there
Marilyn, and
another slide?
we have about 2 more minutes. And
I think
so-
I'm about finished. Is there
Okay.
another slide that I've prepared? This is what I've just stated, that if the relative that's living on the property fails to pay the taxes, all of the owners are still responsible for seeing that the property tax is paid. And that's it. I hope that this was interesting to you. Again, the other 2 presentations were very thorough, and I'm happy to answer any questions you might have.
Okay, and so we'll just jump right into that. Avis, are there any questions for Marilyn?
I'm checking.
If I could add, just to build on what Marilyn has talked about, because we see it in our office often. A lot of times people will, if there is a will, they'll go through probate, or if a spouse dies, they'll do things. If the deed changes at the appraisal district and we see a new deed being filed, changing ownership of a property, that will trigger us to reset exemptions. And sometimes it's not always what it looks like. But for us, when we see something that triggers a deed change, it may just be that you put your property in the name of a trust for estate planning purposes, or you're just adding the name of a spouse because you got married late and your spouse now you want to add them to the deed. To the appraisal district, it looks like an ownership change, but it may not really be that case. So if you do something like that, and we reset your exemptions and remove them, please reach out to the appraisal district and explain to us what was going on. If it was just for estate planning purposes, all we will need you to do is to submit to us a copy of your trust documents showing that you're the beneficiary, and we can go back and reinstate your exemptions. Or if you were just adding your spouse to your deed, and you're still the same person, you still own and occupy the property, we can go back and reinstate that. We just may ask for a copy of your marriage certificate. So again, there are some things that you can do, and you're doing them for legal reasons, but it may trigger an action on the appraisal district side. Again, it really is about communicating with the appraisal district about what you're doing, but there is a chance that we may be able to go back and reinstate your exemptions if they were removed.
Yes, I love that what you just said. Communication is key. And I have found that the appraisal district does listen to these instances. And so before you panic, do communicate with them.
That's great information. Here's a great question I don't think was answered. If one family member has been paying the taxes for, say, over 10 years, can they claim 100% ownership?
Yes and no. There is a provision in the law for adverse possession in favor of someone who's been paying the taxes for 10 years. And people are real quick to jump on that, but there's also a provision that means you need to give notice to the rest of the family owners that you are claiming the property. Otherwise, it's very possibility that you're paying the taxes for all that will just be a gift to the family. It keeps the property in the family and everyone else just gets the benefit. There's always usually an opportunity, even without agreement, that if the property ever comes up for sale, that if you've saved your receipts, you can get reimbursement for the taxes that you've paid over the years.
Okay, thank you.
Thank you. Thank you.
One question I think is very important. I'd like to get it answered. It says, my husband died in October of 2020. In December of 2020, I completed all of the paperwork for surviving spouse over 65 and surviving spouse disabled vet. All was good in 2021, but in February of this year, I received a letter removing all exemptions and had to redo the paperwork, and only the surviving spouse disabled vet was put back on the property before appraisals came out. How does this affect my taxes?
Maria, I think you better answer that.
And why were the exemptions removed? There was no explanation on any communications from the office.
Okay.
And this could be one of those cases where, you know, her property was going through probate and she submitted all the applications and we did everything that we needed to do. And then the probate hit and then the deed got resubmitted and changed the ownership name, and it reset and triggered a reset of the exemptions. I would say reach out to our office and let us know that you were the original spouse of the original owner so that we can make sure that you are inheriting all of the exemptions that you need to. But usually when exemptions get removed, it's triggered by a deed that has been filed. That's the most common trigger that we see in our office.
Thank you. That's great information. Also, do I still have some more time for questions?
Well, if I may just say one thing, the bottom line is when there's a death, I know it seems that probate is expensive, but I would really advise you to do something, not to create a situation or to let the property just sit and acquire a bunch of owners. It may be simply that an affidavit of heirship, especially if there's no will, would cover the situation. And if you're not in any hurry to sell the property, an affidavit that's been on file for over 5 years, generally the allegations in the affidavit are presumed true. Sometimes now our properties have become so expensive, you'll find that title companies are being more cautious than before. And so sometimes I do go ahead and recommend that we do a declaration of heirship, especially if there's some special circumstances in the family. It lets the judge make a declaration of who actually owns the property. But some title companies are still accepting affidavits of heirship. They're requiring that it be sworn by 3 people instead. And usually that's 2 disinterested, 1 interested person. Disinterested people, persons would be persons who do not have any interest in the property. Sometimes it can be collateral family members, but it's someone who is not going to claim an interest in the property. So, let's see.
Okay, next question. Section 3 for reasons to protest has several options to choose from. This is different from previous years. There is no explanation for the dozen of codes listed. Where can we find this information?
So the most common reasons why people will file their protest will be the market value, over market value, or not equally appraised. Legislature added a new code where you could protest both of those reasons in one checkbox. But there should be an explanation on the notice of protest. If you go a little bit further into it, there should be an explanation page in that notice of protest.
Okay.
You know what?
If I do not see the ceiling freeze year marked on my appraisal notice and I qualify for it, how do I get that corrected?
And yes, that's important. So if you don't see your tax ceiling year, or you don't see your over 65 or disabled persons exemption a little bit towards the left of that column, please contact the appraisal district. Again, it could be that there was a deed that got filed and the exemptions got reset. Let us know anything that has been going on with your property, or if we need you to file an application, we'll let you know. But yes, you've got to file an application for your over 65 or disabled persons exemption. It does not happen automatically when you turn over 65. You will have to file an application to get that. So if you haven't filed that application, you can still file it. We can go back 2 years and grant it to you. But yeah, that's important that you file the application.
Okay.
Okay, so we're going to, it looks like we're going to go ahead and drop a survey
Yes.
We want to make sure that you all answer the survey that's going to be dropped in the chat. Slonovia, let me know when you do that. Has that already occurred?
It's already there.
Okay, great. Okay, and I want to just keep moving because this is some vital information that we can all use. So instead of taking the initial break, if you all are willing and ready, it sounds like you are, to keep going, we will. So that will give us some more time for some of the questions that we have. But first, we'd like to give Greg Smith, the President and CEO of the Austin Revitalization Authority, an opportunity to speak. Greg?
Well, thank you, Alta. This has been a great webinar this morning. I appreciate Maria and Bruce, as well as Marilyn, participating in this. I think we've done this several times in the past 7 years, and our stars have shined each and every time. But just real briefly, they want to ask, what am I doing about what the Austin Revitalization Authority is doing as relates to preserving affordability? And Brandy told me not to tell too many stories because I'm only supposed to have 2 minutes. So I'll just tell one short one, which is we have a lot of focus. We put a renewed focus on preserving affordable housing, particularly in the Colony Park Lakeside area. There is a 200 acres or 208 acres that is about to be developed in between those two neighborhoods. And once that takes place, this is going to be a very high probability of gentrification occurring. So we've actually out there acquiring property, multifamily units. We've acquired one. We've acquired a vacant lot in partnership with another nonprofit to develop homeownership for folks at 80% and below median family income. In addition to our multifamily, where we're renting units at 50% of the median family income. And these things will be preserved for the next 40 years. And we do take advantage of all the tax laws that are out there for nonprofits like ourselves to reduce our taxes so that we can maintain the rents affordable for those that are desperately in need of housing, affordable housing. I'll stop there.
Thank you, Greg. Okay, and next we will hear from my president for Delta Sigma Theta sorority, Robin Blackman. Robin, is she on?
Good morning, everyone. Yes, I'm here. Can you hear
Okay,
me?
wonderful. Yes.
Awesome. Good morning. This has been a great conversation this morning, and I think still a lot of questions that could be answered, but it's definitely been informative. We want to thank you all for the partnership and coming and sharing with us this morning with our audience. It is very timely, as I think, I'm not sure who said it earlier, that you send out the smelling salt so we don't pass out when we got our bills, because I was one of those. My smelling salt didn't come in the mail. But you are so correct. I think we all, we are seeing the economy grow. And when we get those as the average taxpayer, we don't understand those statements and understand what our rights are and how we can go about to continue to provide for our families and retain our homes in this environment. So we want to thank you all for sharing that information. And we hope that your doors are open for us to continue to ask questions and learn more as we go through this process. I want to thank our chairs and our leads with economic development for the work in putting this together, and thank our audience for joining us this morning, excuse me, for this very important topic. So again, thank you for joining us, and it's been a great morning and time well spent. Thank you.
Thank you, Madam President. And next, Avis, we're going to jump right back into the Q&A so we can get as many done as we can.
Okay, let's see. I think we did that. Okay, here's one. For disabled veterans, why is it that only 100% disabled veterans are allowed to file property exemptions online? Anything less, there is no information, even though there are possible exemptions.
So the 100% disabled veterans exemption is considered to be a homestead exemption. So we allow filing of the homestead exemptions online. Other exemptions have a different application process and different requirements. So we have to do those in a different manner. We're working to expand our online portal. We just have not been able to complete that development yet.
Okay, thank you. And once changes are made in TCAD for exemptions, does this information go to the tax office, or do I have to notify the tax office?
So the information in terms of the value, any exemptions that are applied are administered at the appraisal district, and we transmit that information to the tax office on a monthly basis. So you do not need to file that with the tax office, only with the appraisal district, and we will transmit it to the tax office.
Okay. Can you cover assessed value versus market value? When is it rental property? Which one are you taxed for, assessed or market value?
So the market value is what the property would sell for as of January 1st, based on sales that have happened in the previous year. The assessed value only comes into play if you have a homestead exemption. So rental property, secondary homes would not qualify for a homestead exemption, so they do not get the assessed value limitation. So only properties with a homestead exemption get the assessed value limitation. And again, that assessed value limitation is last year's assessed value plus 10%.
Okay. If your property qualifies for several taxing units, say Austin Community College District, AISD, City of Austin, Travis County Healthcare, are all of those exemptions subtracted from the property's total assessed value, or will just one exemption apply?
So for each governing body, with the exception of school districts, which have their state mandated exemption, every other governing body gets to determine whether or not they will grant an exemption and how much of an exemption that they will grant. So the exemption amount that is granted from City of Austin may be different from what the county grants, and that may be different from what the healthcare district grants. On your notice of appraised value, there will be a chart that lists all of the taxing entities that can tax your property and the exemption amounts that you are getting for each one of those. And then they each calculate a taxable value. So your assessed value minus any exemptions equals your taxable value. And that taxable value can be different for each taxing jurisdiction, depending upon what they grant in terms of exemptions and how much they grant in exemptions. In terms of claiming more than one exemption on a property, every property owner that's claiming a general homestead exemption can claim it. Again, it's got to be your principal place of residence, and you have to own and occupy it. You can also claim a disabled person's exemption or an over 65. Now, you can't claim both of the disabled or over 65. You've got to claim one or the other. Most taxing entities make those exemption amounts the same, so there's no benefit for claiming one over the other. But you can claim either an over 65 or a disabled person's exemption. But that exemption gets layered on top of a general homestead exemption. So for example, if you're talking about the City of Austin, they grant 20% homestead exemption, and they grant $113,000 in an over 65. You get both the 20% and the $113,000 exemption, and your taxable value becomes even lower.
Okay, so that leads me into the next question. Why is the general exemption not automatically applied instead of the homeowner having to apply for it?
State law requires that an application has to occur for the general homestead exemption, and because it has to be your principal place of ownership and your principal place of residence, you've got to declare that. We would not know whether a property was a secondary home, a rental home, a vacation home, if you don't declare that it is your homestead. So property owners have to file an application and declare that it is their homestead.
Okay, that's great information. Let's see. Are legal, one second. Are there legal services available to assist low-income families in completing affidavits or of heirship for properties?
Okay. That would be in completing affidavits of heirship for
That's
there. Generally, legal aid and those, I'm not sure what their rule is now, their guideline is. Usually if there's property involved, it used to be if there was property involved, they weren't there to assist. I don't think that's the case now. If you're asking about my services, I can give a better answer on that.
And that would be helpful, but the question was, in general, are there any legal services available to assist low-income families? So whatever information you have, that would be great.
Yes. There's Travis County volunteer legal services. There is an office in the basement of the courthouse on Guadalupe that I know there's an attorney that's paid by the Austin lawyers who may offer counseling and may distribute a form for that purpose. But yes, there are legal services available. I just cannot say what the guidelines would be for legal aid or any of those
Okay.
that are available.
Next question. For someone with no experience filing a protest, do you recommend doing it yourself or working with a local tax expert to help with the filing of the protest?
Sure. So we just did a webinar on property protests. So go to our website, traviscad.org, and we go into a lot more detail about the kind of evidence that you need and that you can submit. Most property owners can file a protest themselves. It's meant to be an informal process. And so you can do it. I mean, if you want to hire somebody, you can. I mean, there's nothing wrong with hiring somebody to assist you, but you can also do it yourself. I would say, when you file your protest or you're looking at filing your protest, again, check with your local realtor and see what the comps are in your neighborhood. Because again, the appraisal district, we've got to appraise them at market value. We get tested to make sure we're doing that. If we're going to be lowering our values, we've got to have some evidence to approve why we're making an adjustment or why we're lowering the value. So we're going to be looking for, do you have additional comparable sales? Also go to our website, www.traviscad.org, and there's a property search. You can look your property up online and make sure that we've got the characteristics of your property right. Is the square footage correct? Do we have you listed for having a swimming pool and you don't have a swimming pool? Make sure that those are the things, that we've got all the characteristics of your property correct. That's a common thing for property owners to submit in terms of evidence. The other thing is if you've got condition issues with your home, say you've had mold damage or you've got foundation issues. If you've had cost repaired estimates done or you've had an insurance settlement done, submit that information or photographs of your damage to the appraisal district. Now we're looking for major damage to your property, major issues. Just because you need a new rug is not going to be substantial or new. Everybody needs new rugs. But if you've got foundation or termites or anything that's major that would impact the value of your property, then you can submit photographs and then any estimates that you may have gotten that would, how much is it going to cost you to fix it? And that's all good evidence. But again, you can do it for yourself. There's no reason for you to hire somebody, but sometimes it's a convenience for property owners to hire somebody. I would also say pay really close attention to your market value and your assessed value, because that assessed value is a state mandated calculation and you're not protesting that. You're protesting the market value. So if your market value is $600,000 and you've got an estimate that you've got $10,000 in reduction, you might get your market value reduced to $590,000, but your assessed value is still $338,000, and that's not changing because that's just a calculation. So you may also want to weigh whether or not it's worth your time to file that protest.
Okay. Here's a good question. Do you think Austin's hot housing market is operating in a bubble, and will it continue to increase?
I do not think we're in a bubble. I think it will increase and continue to increase. We in Austin have a real issue with supply and demand. We've got a lot of new companies in. We've had Tesla, we've got Oracle, we've got Apple, we've got a lot of companies coming in, and they're bringing jobs and they're bringing people. So our population keeps increasing, but we don't have any housing inventory for these people. So there's a lot of competition for any housing that's available. That competition is what's driving up those sales prices. And you guys have heard it just like I've heard it about properties that are, they're selling as is. They're being bought by investors. People are paying over market. There's bidding wars on housing. It's a supply and demand issue that we've got. We've got too much demand for housing, not enough supply, and that's just putting upward pressure on our prices. And I don't see it slowing down because I continue to see new businesses continue to move into the Austin area. We're becoming a really, really major tech hub in the United States. So we see a lot of investment in tech businesses coming in, and they're bringing jobs. And Samsung just announced that they'll be bringing their new plant into Hutto. Tesla just opened up their new plant. Apple opened up and they're hiring 5,000 people. Amazon opened up and they're bringing in a big distribution center and hiring 3,000 people. I mean, there's a lot of jobs available, but a lot of people are moving into the area because of those jobs, and they're competing for housing resources.
Okay.
Awesome. Thank you so much.
Thank
Okay,
you.
awesome.
Thank you. Thank you. Thank you, Avis, for those questions. And thank you, panelists, for giving us some good things to consume. Let's just do a quick round robin for final brief words. So let's start with Bruce on that. Bruce, any final words?
Well, tax bills will be going out in October, November. If you have issues, please contact us so we can work with you from the beginning and not after the penalty and interest is really high. If you work with us, we're going to find a solution. If you don't call us, it's not going to end well.
Okay. Maria?
I will remind property owners that May 16th is the deadline to file your protest. We encourage property owners, don't wait till the last minute. Again, filing online is the quickest and easiest way to do it. But if you're going to file by paper, make sure that you get it in the mail before the protest deadline. And know that the post office does not always postmark the envelopes. So if you're looking at dropping it in the mail on the 16th, I would say go into the mail post office and make sure you watch them postmark your envelope so that we get it and it is flagged as a timely protest.
All right. Thank you. That's great. Okay, Marilyn.
Communication is key. If you find that you're in a situation you're having difficulty addressing your property tax issues, get in touch with someone immediately. Talk to those offices. If you don't like what they're saying, call an attorney. And then as for title issues, address them immediately. You ask whether there were whether there were agencies available to help low-income people. They're going to help you if your dad just died, perhaps. But if you're talking about sitting on property that's been in your family for generations and generations, that's not what they're going to do. But go ahead, get with someone who will work with you, and think long-term. Think long-term in addressing it. It's not going to happen overnight.
Okay, thank you so much. This was extremely informative, and I know that everyone on this webinar is going to heed to your valuable information that you've given us. So I would like to just sum it up in 2 words that I'm hearing from all of you, and that is communication and action. Those are the two big pieces, 2 big takeaways that I'm going to take away, and I'm sure others will as well. And I want to make sure that I reiterate again, please complete the survey. We really need that, and that'll help us. So if you could please take just 30 seconds, it's not even going to take that long, and fill that out, we'd appreciate it. And are we still doing the photo, you all? I don't hear a yes.
Sure.
I don't. Okay, well, let's do it. Okay. So is our tech team doing that? Synovia, are you on? Okay, you're on. I see you. Who's handling that? Make sure.
Everybody smile. I can take a screenshot as well. I don't know
Okay.
what technology was doing it.
Okay, thank you.
I'm about to take a screenshot.
All right, everybody smile. Okay, I got a couple in.
Okay.
Did you get
All
them?
right.
One more.
Mhm.
I caught, sorry, President, I caught you doing duck lips.
Okay, I'm sorry.
One more second. In 3, 2, 1. There we go. Thank you.
Again, on behalf
Thank you,
of,
everyone. Yes.
okay. Again, on behalf of the Austin Alumni Chapter of Delta Sigma Theta Sorority Incorporated and the Austin Revitalization Authority, we'd like to thank our panelists and our committee for economic development, as well as the ARA staff, and of course, our tech team, because we would not even be here.
Also, did we get last words from
Great.
Greg? Did Greg speak?
Greg did speak. Greg, do you
Okay.
have any final words?
Okay.
Do you have anything that you might want to add?
Brandy told me not to tell any more stories, so I shouldn't be talking much. But again, I wish the audience this was informative for the audience. I appreciate them showing up, and I look forward to doing this again.
Okay, and also in addition to the survey, can we also flash up the contact slide? Is there a contact slide, just in case anyone has any questions that may or may not have been answered, either in part or in full?
I didn't get that over to tech.
Okay,
So-
no worries. Okay, then, all right, we'll have that. We'll see you next year, I guess. Thank you so much, everyone.
Thank you.
Have a great weekend.
Bye.
Bye-bye.
Bye-bye.